We've all heard about the record inflation. We're all feeling the impacts of it right now. So what's in store for those looking to buy in the current housing market? Joining me to talk about the current state of that housing market right now is Dave Elizondo from True Financial Partners Bettendorf. Good morning, Dave. Thank you so much for being with us this morning.
Good morning, Josh. Thanks for having me.
First things first, we know the Federal Reserve is continuing to raise interest rates. Give us some perspective of kind of where those rates started and where they are now for home buyers.
Okay. Well, at the beginning of the year, mortgage rates were between 2.25% and 3%. So it was pretty cheap to borrow money. Since then, though, with all the interest rate hikes, mortgage rates about a month ago were between 6 and 6.5%. So depending upon your math, that's double. It's between double and triple is what it costs to borrow money for a house nowadays. Now, the good news is that from just about a month ago, mortgage rates last week had dropped to about 4.99%. So that's good news.
How have those higher interest rates really impacted prospective home buyers?
Well, it just makes the cost of borrowing money more expensive. So when interest rates are, the difference from 2.5, let's say up to 6.5, for someone who's buying a home, say in the $300,000 to $400,000 range, these higher mortgage payments make their payment between $250 and $400 a month more expensive just from the cost of borrowing that money.
Now, I know none of us have a crystal ball or anything to kind of see the future, but when we're looking forward, what can we expect to see in the next few months or even the next year or two when it comes to mortgage rates?
Sure. Well, the Fed has announced that they're going to raise interest rates one or two or three more times before the end of this year. So that's probably going to make interest or mortgage rates a little bit higher. Now, the good news is that the Fed has also hinted that they might reduce interest rates next year, which means that maybe 6, 12, 9 months from now, it might be cheaper to borrow money than it is, say, between now and the end of the year.
So what advice would you, as somebody who works in the financial sector, give to some advice? What would you give to them looking for that new home or even to just borrow for anything right now?
Well, there's been a buying frenzy in the home market the last year or two, and prices have been sky high. Now, that's cooled a little bit, but with the buying frenzy and with higher mortgage rates, homes are pretty expensive. But I think that, and also buying a home is a very exciting thing. But if you could maybe curb that enthusiasm or curb that excitement and maybe put that off to a side for a little bit, if you're willing to wait sometime maybe into next year, you might find that it might cost you a lot less to buy that same home than it would right now. So I would suggest maybe you should wait if you can.
I also want to look at the flip side of that for folks that maybe are wanting to get into the market to sell. What does that look like right now?
Well, it's a great time to sell because prices of homes are still pretty high. So it's a great time to sell. The problem is that on the buying side, the buyers, there's a lot fewer buyers out there today than there were 6 months ago. So it's taking a little bit longer to sell a home in the Quad City market than it did 6 months ago, but still a very good time to buy. I'm sorry, a very good time to sell.
Do you know of people that you're talking to in your office, how long they're having to wait to sell, and how is that impacting them financially?
Well, in the Quad Cities on the Davenport and the Iowa side and the Illinois side, it's taking 15 to 20 days on average to sell a home, which was a lot. It was a lot higher a few years ago. So that's not very long to when you put your home on the market. That's a short time to have it on the market for selling. But then the other side is if you sell your home, where are you going to go? Because then you're going to have to buy, and it's going to be just the opposite.
All right, Dave Elizondo with True Financial Partners in Bettendorf. Dave, thanks so much for joining us.
Okay, thanks for having me.